shouldn't say this. I was going to say it's likely that the markets will be unfazed by it, but I may be wrong about that, so I won't say it. We'll see at the open. Right now, everything's pretty much scheduled to open flat. Of course, yesterday was an interesting day in the markets. As in typical fashion, the only thing that mattered was the last 15 minutes. It appeared as though the Dow was on this charge of heading towards an all-time high, and it got all the way up to being about 22 points away from an all-time high, and then all of a sudden, so I don't know what that was. I'm just going to say it was somewhere around 80. I don't remember, 80 some dollars, or 80 points away. And all of a sudden it came tumbling down and ended up finishing negative 20 points. The S&P and the NASDAQ also finished negative. Very interesting when I looked at a chart of yesterday's market. There was this huge spike at one time. And in volume, in other words, buying volume was a huge spike. So all of a sudden, things are plugging along. At around midday, we see this huge spike in volume. And of course, with that spike in volume, we saw the markets turn up. Well, here's the thing here's the reason I point that out. The odds of that being just a group of investors or a whole bunch of people all at the very same time deciding they're going to get in the market is slim to none. So it was obviously a huge electronic trading organization that was, or high speed, high capacity trading that made some trades all at once, and or it was one big institution that did that. So the reason I bring that up again is because it's a little concerning, and it's not nothing that we didn't know and we've been dealing with for many years. Is that it looks as though you have this situation where could it be that one institution or one trading platform could impact the entire market? And I think it was kind of confirmation that it did. I mean, it obviously wasn't a whole bunch of traders. I mean, a good volume day, you see pretty much a steady, consistent volume. There are times that you have a specific piece of economic news that comes out that is either negative or positive for the markets. And when that happens, you will see spikes in volume from that point on, either on the negative side or the positive side. But this wasn't like that. It was strictly just a peak. It shot up, came back down, and that was it. So very interesting. But nevertheless, I guess the big question is in the pre-markets, is the Dow going to reach an all-time high today? We shall see. But that's not the economic news I wanted to talk about. There is some disturbing economic news that came out. Everybody's trying to paint a good face on this, and certainly I agree with some of the assertions that this isn't really a good indicator of what might be going on. But here's the good news for the economy. These are the kinds of things that make Ben Bernanke happy. Spending climbed. This is for the month of January, by the way. These numbers are all for the month of January. These numbers are put out by the Commerce Department, and they come out once a month in reference to spending, income, and inflation. So the numbers come out this morning. Spending climbed for the month of January. I'm reading from the Commerce Department report. Spending climbed 0.2%, 0.2% last month to a seasonally adjusted basis. The Commerce Department said Friday that was slightly higher compared to a downward revised 0.1% increase for the month of December, which was a very low spending increase for December, for obvious reasons. Here's the thing, though. So that's the good news. Personal income for the month of January sank to I'm sorry, 3.6%. It marks this 3.6% drop in income, marks the sharpest drop in personal income, any 1 month personal income in 20 years. Now, you've heard me talk about the median income of a family being dramatically decreased over the last 4 years. And the last thing we can afford, and here we have a recovery, right? We have an economy that is supposedly in recovery mode. Dropped to the sharpest drop that it has seen in 20 years, 3.6%. Now, in fairness to the number, and by the way, most economists surveyed were forecasting about a 0.2% rise in spending, which they got, and about a 2.6% drop in personal income. Now, the reason, and remember that in December we had an increase in income by 2.6%. Now, the reason that we saw this dramatic increase in income in December is likely because there were companies that were giving year-end bonuses in the month of December to avoid a higher tax structure for those people that were getting those bonuses, where normally the bonuses are based on a calendar year and they are calculated after the December 31st numbers come in, and generally people would see that bonus in January, okay? But this year, most companies expedited that and probably just formulated some sort of assumptions about what the rest of the month of December was going to be, and they issued their bonuses, obviously driving income up to an unusual 1 month high of 2.6. Well, it looks to me, I don't know this, but it looks to me that economists were saying, well, the 2.6% income in December was odd and unusual and based on this bonus thing. So it is likely that December we will see a 2.6% drop over December, right? Because that was a one-time deal and that's gone away. Well, they got a 3.6% drop. So the headline will be, and you'll hear people talking about this over the weekend, that it's not that big of a deal because it's just basically the bonuses. Okay, but if you take the bonuses out of the equation, then you still have a 1.6% decrease in personal income. And a 1.6% decrease in personal income is pretty big. As a matter of fact, it's huge. So all I'm saying to you is when you hear the numbers, take it to the next step. Take that into consideration that that you've got this 1.6%, which is still big. Look, I don't care if it doesn't matter if it is 0.6% decrease. The fact of the matter is we got a so-called economy that is, by some standards, very much in a recovery, right? Now, yesterday, the GDP numbers, when the new GDP revision came out, is looking like we're on track 2012 for 2.2% GDP growth. That's not growth. I'm not going to go into all that because you've all heard me talk about it over and over again. That is not growth, folks. 2.2% is not growth. 2.5% is growth.